I'm Daniela Cambone for Kitco News, and you are watching In the Lead with Jon Nadler for the week of April 25th. Big question of the day, John. Will they or won't they? The Fed meeting concludes tomorrow, and they're either expected to extend the stimulus package past June or to say, hey, it's over and we're raising interest rates. I know you can't tell the future, but what do you think they will do?
Oh, but I can. Yes, it is the question on everyone's lips this morning, and of course, as we head into tomorrow. This could be the year's potentially most important Fed tete-a-tete. And what's different about it this time, I think, is that Bernanke will finally, and for the first time, really go in front of cameras and do an actual press conference, which is the first in a series to come. The Fed has indicated that it will embark on a series of public communications appearances by the Fed chairman and others in order to keep the public and legislators informed as to Fed policies. That said, I think we need to look into that press conference and see what develops, because very often when you put people in front of cameras, the unexpected happens, and perhaps verbal posturing could be read into the Q&A that Bernanke will be facing from reporters, and I think a lot of parsing of what he will say will take place afterwards, perhaps more so than what comes out of the actual meeting and the communique that normally follows such a meeting. It is indeed a pivotal gathering for the Fed, and Bernanke has his hands full in trying to decide which way to now go following the expiration of QE2 at the end of June. There's a school of thought that says they will leave everything as is and no interest rate hikes for the foreseeable future. And quite another school of thought that sees commodity price inflation filtering into the system and derailing the very recovery that the Fed has tried to put into motion through these QE programs. And that type of pressure could in fact prompt the Fed to act come the end of June. Question is, which way will they act? A fairly swift rise in interest rates shortly thereafter, or perhaps just a cessation of the bond buying program and an indication that interest rate hikes will only come later if warranted. So these are the pivotal questions.
Okay, my inside sources tell me that Bernanke is expected to stress that he's planning to keep interest rates low. John, would this surprise you?
It wouldn't surprise me, but I think the language will have to be carefully studied in order to ascertain whether or not there will be additional type of stimulus coming, because that's quite different than just simply keeping interest rates low. Keeping interest rates low seems to be fueling this commodity frenzy, which is certainly bothering the Fed and, of course, bothering our overseas partners. We've heard numerous complaints from, of course, China and so on, that they're importing our inflation. And this is not sitting very well with leadership there. And I'm sure they've made all sorts of critical noises in the direction of the Fed, as to how much higher they can let inflation go. The weak dollar certainly is the same situation. We've seen intervention on the part of several central banks last week in the face of declines in the dollar and unwelcome gains in local currencies such as Korea's and Thailand's, where local central banks actually try to avert undesirable gains in their home currency by, in fact, intervening in the foreign currency market. So this is becoming sort of a critical juncture here for the Fed to really show some form of action.
So break it down for us, John. Whether they choose path A or path B, what would this mean for gold?
Well, if they were to choose path A, which is a hawkish stance, and indicate that not only will the bond buying program come to a complete end, but there will be no further asset purchases, and in fact there will be the first indication of asset disposals, then of course the markets might react negatively, because all of this could be a shot in the arm for the beleaguered dollar. If, on the other hand, the only indication we get that the bond buying program will come to an end, but that the interest rate environment will stay as is, let's say through year end, then I think commodities players, certainly in the oil and metal pits, might continue their aggressive pushes to the upside, at least for a while, even though seasonality is now coming into the marketplace sometime between May and July. And, there's a fact action of sellers that might want to take advantage of that normally weak period in prices and try to beat the metals lower. So at any juncture, it is an arm wrestling match, and the Fed meeting only adds fuel to the fire.
Jon, finally, if we focus in on silver now, some veteran analysts have gone on the record saying that we may be experiencing a short squeeze in silver futures. Lots of speculation in this market right now. What are your thoughts on silver?
Indeed, it's not much of a departure actually from our theme, because just one look at the trusty Kitco iPad application here tells me that with a $1.80 decline of nearly 4% at the very moment of our taping, the silver pits are still afire with speculation and the tug of war between buyers and sellers. It is an extremely volatile market. It has been subject to a lot of rumor and innuendo and conjecture and so on. But at the end of the day, I think what we're seeing here is a concerted effort on the part of the longs to push prices. Well, we've seen them practically at the $50 level as of Monday. And of course, profit takers coming into the picture as well when such prices emerge. The important thing to note here is that the so-called short squeeze is in fact not a lot of tonnage. In fact, the rises that we've seen for the last 5 or 6 sessions in the white metal have been largely due to a bit of short covering and probably no fresh business, as one of our colleagues has indicated, which means that it's just basically trying to mitigate your damages. Now, where this ends, it's anyone's guess. Right now, we've seen declines on the order of nearly 12% from the highs in a matter of literally less than 24 hours. And, I think the volatility will continue here as buyers and sellers aggressively push this market around.
Okay, great. Thank you, Jon. We'll see you again next week for another edition of In the Lead.
We'll see you all then.